This past week, I saw that The Big Short was trending on Netflix. The Big Short, of course, is a film about the 2008 financial crisis. It's an amazing movie. It needs a bigger punch when they break down the banks were collapsing, the lenders were collapsing. But for the most part, the movie is absolutely fantastic with an all-star cast, including Christian Bale, Brad Pitt, Stephen Carell, and who else is in it? I don't know. There's a whole... Ryan Gosling's in it. Yeah, he's in Barbie, too. Awesome movie. The movie talks about Michael Burry, as well as a few other investors who took the unprecedented move of trying to short the U.S. housing market. Everyone thought they were crazy. Are you nuts? Everybody pays their mortgage. If you're right, the economy collapses. How long ago was this? Maybe like 17 years ago. Maybe it was 16 years ago. I knew someone who told me that they had, their family had given them a trust. Or that, whatever it was. I don't know. They had a bunch of money invested in their name by their parents. And I said, wouldn't you rather have the money to do stuff with? I mean, I get it. It's tens of thousands of dollars. But what if the market collapses? And what I was told was, ha, ha, ha. If this stock goes down, the country implodes. So what do I care? And I thought that was really interesting. The mentality of this was, man, and this might have been before. No, I think it was after the financial crisis. But it was interesting to me that the idea was, what do I care? If the investment goes up, I make money. And if it goes down, everyone's suffering anyway, so whatever. And that's basically the gist of what was going on. Nobody believed the market would crash because they were like, that means that millions of people would be homeless and it would never happened before in history. And sure enough, it did. Let's get to the news. Shark Tank star Kevin O'Leary warns that soaring interest rates will bring mayhem to the economy before Christmas. Really? The investor said that America is headed towards a rebalance because of high inflation and interest rates. The Fed's interest rate is currently 5.5%, but could rise further as Chair Jay Powell tries to cool inflation. A high interest rate pushes up the cost of debt, which threatens business and households with mortgages. That's right. We could be heading towards the same thing. Which brings me to the big story from the past couple of weeks. Michael Burry, of famed The Big Short movie fame, he made a big bet. In that movie, and it's a movie, it's a dramatization. They even point out some points in the movie, it's really funny. Like there's two characters who find a prospectus, like a pamphlet explaining a plan for shorting the housing market. And they're like, whoa, look at this. Then the one guy looks up, actually, this didn't happen. We heard about it from a friend of a friend, so this is a fabrication. But anyway, it's a great movie. In the movie, Michael Burry says, I want to short the housing market. His investors are like, you're nuts, stop, don't do it. And then he says, you can't even short the housing market. How would you do it? He goes, I'm going to get a bank to create the proposal, and then I'm going to buy it from them. It's actually really simple. I'm not a financial guy, but the general idea is with put options, with shorting a stock. Again, not an expert. My general understanding is you've got three parties. One guy owns a stock. One guy wants to buy a stock, and then there's you. What you do is, let me borrow the stock from you, person A. You then sell it to person B at its current value of $50. You get all that money, but you owe person A that stock. Now, if the stock goes down, you can buy it back, but keep the profit, and then give the stock back to the person you borrowed it from. It's an interesting way to bet against a stock. With the credit default swaps, it was basically just, hey, I'm going to pay you every month for insurance. And if the stock, the bond collapses, then I get paid out. That's basically the general idea. Well, Michael Burry is now making a $1.6 billion bet against the U.S. stock market. And they're mocking him and they're laughing at him, even while all the data points are coming out. That's what I find fascinating. In the movie The Big Short, there's a part of the film where all these guys who bought these credit default swaps are watching defaults escalate, skyrocket. Mortgages are collapsing. And they're like, certainly, these bonds must become worthless. They go to the banks and the banks are like, no, everything's fine. We're going to keep valuing your bond very high. And they're like, how? It was fraud. Apparently what the banks were doing, they knew the bonds were collapsing. The subprime mortgage loans were worthless and people were abandoning properties. So instead of publicly announcing, they secretly started offloading these securities to other banks to minimize their exposure, knowing the collapse was coming. Evil. And then it happened. In the meantime, Michael Burry and others who bought these swaps were facing losses. They were paying premiums despite them knowing what was going on. Finbold writes, here's how much Michael Burry is down on his $1.6 billion bet against the stock market. Now, this is different. With put options, it's more so when you have to, when they come due or get called or whatever. Again, not an expert on this stuff. But you can hold on to these options for a long time and not realize any losses or gains. So, here's what they say. 15 years after his famed bet against the mortgage market led to substantial gains, legendary investor Michael Burry has once again set his sights on a major financial maneuver. This time he has taken a big short position against the stock market by purchasing an impressive 40,000 put options against put option contracts tied to the SPDR S&P 500 ETF Trust and Invesco QQQ Trust. The disclosed data from earlier this month showcased a combined nominal value of $1.6 billion for these contracts. However, it seems that for now, Burry's short position is at a heavy loss. Notably, a widely followed stock trader known as the Gurgavin on Twitter revealed on August 27th that Burry is down 42% on his short bet, assuming that the investor is still holding the positions. It is important to note that while the combined notional value of the two positions was a whopping $1.6 billion, Burry spent only a minor portion of that figure to build his new big short. According to Gurgavin's estimates, the fund manager likely only spent around $26.5 million to build his short position. In particular, he invested $18 million on 20,000 SPY put options and about $8.5 million on 20,000 QQQ puts. There's a possibility that Burry built the two positions as hedges aimed at softening the blow to his investment firm Scion Asset Management if the stock market declines and its long positions lose value. On the other hand, the puts could also indicate that Burry is feeling bearish about the two flagship index funds, which are significantly impacted by large cap stocks such as Tesla and Nvidia. Meanwhile, it should be emphasized that it remains unclear whether Burry is still holding the two contracts, given that there has been no update on his holding data since June 30th. Perhaps he sold them. Or perhaps, doesn't matter. Next year, anybody paying attention to the political turmoil might suspect that for political reasons, stocks will collapse. General market downturn. I wonder. I can only say this. If Michael Burry is correct, Donald Trump likely wins in a landslide. And by landslide, let me clarify for all you wingnuts. I mean, that figuratively, I don't know what landslide actually means. I'll say Donald Trump wins decisively. If the economy takes a major hit, Trump comes out and the incumbent loses. If he's right about this market bet, then we're going to see Trump 2024 win. The economy takes a hit in an election year, and that is apocalyptic for the party currently in power. Donald Trump comes out and then says, remember 2019, we had excellent gas prices, very low, some say the best, $1.40 for gas. Now, you can blame the global lockdowns for that, to be completely honest. But gas was still around $2 something on average. And then Biden took over, and now it's around $4. I don't know about where it's at by you, but it's around $4 by me. And we're in a more rural area. Typically, gas is a little bit cheaper here. That's already bad enough because gas prices track alongside political elections. I got to say, there are fears about all of this because even Kevin O'Leary is saying there's going to be a rebalancing this year. So perhaps Michael Burry is correct. And he can realize massive gains before Christmas. And what does that mean for all of you? I have no idea. I'm not a financial guy. I couldn't tell you what to do. I don't even know what I should do. Everyone's got some idea or some plan. But I'd be willing to bet the guy who made, what did he make, like $500 million? That's the number they gave in the movie, $489 million. No, I'm sorry. He made like 1.3 something billion, I think. The value was around 1.45 billion. He bet 1.3 billion, and then he came out with 2.69 billion or something like that. So maybe he's right. And if he is, maybe talk to a financial advisor about what you should be doing right now. And I have to be worried about what this means for the global economy because if the crash does happen, at a time when the BRICS nations are poised to launch their own currency and are trying to compete with the petrodollar, that's going to be their time to strike. It's bad news for America, my friends. But I don't know. I'll leave it there. Next segment's coming up at 1 p.m. on this channel. Thanks for hanging out, and I'll see you all then.